another edition of the Contractors' Secret Weapon weekly podcast with your hosts, Dave Negri. This program is dedicated to helping contractors, remodelers, painters, roofers, roof cleaners, and business owners in the construction industry gain an unfair advantage over the competition. This program supplies you with information that the competition doesn't even know exists. This session brought to you by ContractorsSecretWeapon.com.
Before we get into the conversation with you, I just want to do a shout out to our sponsors who help promote Contractors' Secret Weapon and just some of the things that they have in store for you, our listeners. Hey, is your phone ringing enough? Do you want it to ring more with highly motivated and qualified buyers that contact you, the contractor, directly? No more waiting for the phone to ring. Just answer that phone. Best Home Services leads are dedicated to making your phone ring with motivated buyers that call you directly. There's no obligation to talk with them. Just go to ContractorsSecretWeapon.com/money. Fill out the form to secure your discount on the setup fee. Do it today. This special will not last forever. Check them out at ContractorsSecretWeapon.com/money.
Running a small business is no easy task, and I should know because I had a service company for almost 10 years. I am the founder of a software called Radius Bomb, and it's unbelievable. And for all the listeners of Contractor's Secret Weapon, we have a special offer for you to check out. If you want to send hyper-targeted, laser-focused, super personalized postcards to your exact prospects using a map while sitting in your underwear, then go to ContractorSecretWeapon.com/Radius Bomb, and we'll give you your first 100 postcards for free. Just go to ContractorSecretWeapon.com/Radius Bomb.
Hey, this is Dave Negri with Contractors' Secret Weapon. Thanks so much for being with us today. You are really going to enjoy our guest, Diane Gardner. Now, Diane has been on our show in the past, I think last year sometime, and I really got an opportunity to meet her at a seminar that I was at, and she actually spoke there, and we got a chance to meet up afterwards and spend some time together, and wanted to have her back on the show. So if you don't remember who Diane is, she is a tax coach. She's a best-selling author, a Quilly Award recipient. She is a certified tax coach and an enrolled agent. Her expertise lies in the area of tax planning, and her goal is to make sure successful entrepreneurs across the United States are paying the least amount of income tax they can legally pay. And as a tax coach, she offers a free tax analysis to those interested in finding out about whether they're overpaying their income taxes or not. She is passionate about what she does because, there's nothing better than to let people know that they're saving money. So if you save money, what does that mean? You're making more profit. You don't have to pay to the IRS. So let's get into our interview with Diane. Hey, Diane, it's really great to have you with us today. Again, we had you on last year, and I'm excited today to talk about, especially being close to the end of the year, the 10 most expensive tax mistakes that contractors make. So thanks for being with us again today, Diane.
Oh, Dave, thank you for having me on your program and for having me back again. That's always an honor when I get asked to come back on a show a second time.
I know, and I finally just got to meet you in person, which was awesome, in the end of September in Rhode Island. And you did a talk on tax, which was excellent because you kept it interesting. And you know how normally people who talk about taxes get boring.
I know. Yeah, it's the last thing people want to do is listen to somebody drone on and on about tax.
But you did an awesome job, so I know that we're going to be in for a real treat today.
Well, thank you.
So you're settled down. You just moved into a new office, and so we're going to talk about the 10 most expensive tax mistakes that contractors make. And so what's the number one thing that you see?
Well, the absolute number one thing is failing to plan. They get so busy running their business, getting that next job finished, and running on to the next one, getting that bid out there, whatever it is that they're trying to do, that they're not thinking about the fact that they can change their outcome for their taxes dramatically if they will sit down with somebody who's proactive and lay out a plan. And that is such a simple concept, but such a vital one. And I see it missed all the time by people. They come in my office with their bag or their box, or hopefully some real financial statements, because I don't like bags and boxes.
Yeah.
And they sit down and I work on their tax return, and you get to tell them, hey, Dave, by the way, you owe about $35,000 in tax. And of course they have a heart attack. I don't have any money.
Yeah.
Well, but had they been meeting with somebody throughout the year and been proactive, that we could have that conversation. Hey, Dave, because of the tax planning that we've been doing, you just saved $15,000 in tax this year. How does that feel?
Wow, it feels a lot better than it did last year.
Oh, yeah. And then now you're happy because you saved that money. You put that money back in your pocket instead of in the government's pocket. And I think you heard me say at the conference where I spoke that we all have to pay our fair share amount of taxes, but none of us are required to leave a big tip to the IRS.
Tip? Wow, I don't want to leave a tip to the IRS. Come on.
No, leave a tip at your local restaurant, but not at the IRS.
That's right. They treat me better and they feed me better.
They do.
So, thinking about contractors and even small business people, planning is such a big key. It really makes or break every business, whether it be goals or tax planning or, marketing planning. I mean, it's really the one big nut that we plan more about going on vacation than we do anything else, don't we?
Yes, we do. And that's kind of sad that we don't put any thought and planning and strategizing or anything into the future of our business. And I know I was guilty of that in my early years of business, and I'm an accountant. And so I know if I did it, other people are doing it too, that you just get so wrapped up into that day-to-day, keeping that business humming along, that they're not even thinking about planning. Putting together, like you said, that marketing plan or your tax plan.
Right.
Those are very, very, very important.
And I think one of the biggest challenges that, we as business owners don't think correctly about is in the area that you're in is tax planning or tax coaching or even, accounting and certified public accountant stuff, is that we don't think about you as a team member.
Right.
Because because we've been so used to through the ages, and most accountants are great at what they do. They give you the numbers and they tell you what you did in the past, but that's really not what you really need to know about, is it?
Right. Yeah, you really need to find an accountant who's proactive and who will look forward, because we can't spend our lives driving by just looking in that rear view mirror, or we're not going to get anywhere. All that's going to tell us is what already happened behind us. So we need to be looking ahead, laying out a plan over the next couple years, 2, 3, 4, 5 years, whatever we can do. Lay out a plan on where we think this business is going to go. Have your strategies in place of how you're going to get from point A to point B. And then as this business is growing and those profits are starting to increase, then we want to lay out a plan for how you can put more of that money back in your pocket and give a smaller percentage of it to the government.
I'm all for that.
Yeah, that's the fun part. I get to say, I get to be a tax superhero because I get to have those conversations with my clients. And we would sit down, Dave, a couple times in the year and be putting together this plan for you. And so then at tax time, when we've prepared those tax returns, probably plural, and then I sit back down with you and we look at this and go, look at how much we saved because you followed the plan. And that is such a monumental, I guess like a light bulb type idea when people actually see that for the first time and they're actually able to see that they did not overpay their taxes by a particular amount of money. Makes them pretty happy.
Yeah, and I would rather know ahead of time of what I'm not paying than like getting a crazy bill saying, well, you owe this much. Or even if I did miscalculate and I paid in too much, then I'm getting a ton of money back. I don't want them to hold on to my money any more than I want to give them my money.
Right. When I first started doing tax planning, one of my very first tax plans was a client of mine who was a machine shop. And he had been paying a ton and a half of taxes every year. and he was a fairly new client to me. Then when I looked at his tax return, I about had heart failure at how much tax he was paying. And so we immediately sat him down and said, I'm just getting started in tax planning. Can I practice on you? And he said, yes. He wasn't going to turn me down, but he was a little skeptical because he had never heard about tax planning before. And he, at the end of the year when it was time to file that tax return, because he didn't trust me and was a little skeptical, he went ahead and kept making those humongous estimated payments that he had always made.
Okay.
And so at tax time, when I did his tax return, I called him and I said, hey, what would you do if I told you you had a $35,000 refund this year? And he got really quiet on the phone for a minute. And then he goes, Diane, I have to admit, I didn't think you could pull it off. And that's why I kept making those payments. Yeah, and so it was so exciting to show him that, yes, these strategies work. They're right out of the IRS code. It's no, smoke and mirrors or any of that kind of stuff. It's totally right out of the IRS code. IRS approved, court tested, and they work year after year after year after year. That same particular client, because he's so disciplined, he continued to make his estimated payments, the ones he had to make to the IRS, and the difference between that and what he used to make to a savings account. Wow. He has since bought a commercial building for his machine shop, and it is totally paid for. Wow. All of that through taxes that he would have been given to the government. And it's pretty cool when I drive by and see his completely paid for building.
Yeah,
wouldn't have. He would still be renting otherwise.
That's a stamp, and every time you ride by, it's a testimony of what you can do for people.
Right. Yes.
That is really cool.
Yeah, and that's just a small little, 2 or 3 person business, but we've been able to do that over the years with him.
Wow.
And so he's one of my neatest success stories because he's got a building sitting there.
And I'll bet you are his hero now.
Oh, yes. Oh, yes. And he sends me people fairly often,
I'll bet.
That want me to replicate that same type of thing for them.
Diane bought me this building.
That's right.
She can buy you one, too.
But you have to be disciplined and you have to follow my plan.
Yeah. Well, I think that's one of the neat things about, when we do get into disciplined situations, and the smart business thing to do is to take that money and, like he did, and put it aside for the future, and which he did for, because that can be a great, if he sells his business, he keeps the building and rents the building, and now he's got income for life.
Yeah. Now it's part of his retirement plan that we've put together, and it gives him a lot more options than back when he was renting he rented for, 15, 20 years.
Wow.
And now he has this building that he's had for about 4 years now.
That's so neat. That's so exciting to see.
Yeah.
Actually the business dream come to a fruition and not keep chasing after because you've put a plan in action.
Right. Yeah. And so he laughs now when I remind him of that day when I asked if I could practice on him because at that point I had not done hardly any tax plans for people. And so I wasn't sure if I could really do everything that I had been taught to do, and it really did pay off. So
you followed the lessons step by step, and he followed the lessons step by step, and everybody came out a winner.
Yes. Yep. And he still continues to win, today when we do this year's tax return. He'll pay a fraction of the tax that he used to pay.
Cool. That is so exciting.
Yeah.
So what's the number 2 item you see the biggest expense? Tax.
Well, the next item I see is people outgrowing their entity type.
Oh.
I should say businesses, not people. Businesses outgrowing their entity type. Because a lot of times, contractors, especially when they go into business, they just start up and they're a sole proprietor because they didn't know that they needed to do something else. They excel in one of the trades, a general contractor, a framer, whatever it is that they excel in, but nobody taught them or told them about the importance of various entity types.
Wow.
And so that is one where I see them leave a huge amount of money on the table.
Yeah, that can be catastrophic, huh?
Yes, and potentially leave themselves open for a very large amount of liability. Because anybody who's in the construction world knows that if there's something goes wrong with that house, that office building, that whatever the structure is, and you're going to get named in that lawsuit somewhere along the line. And so you want to make sure that you've protected yourself and put some sort of liability protection in place whether it be through an LLC or a corporate entity or something along those lines. And I see that all the time, especially with newer contractors.
Yeah, I was fortunate enough in my early years to learn that you want to own nothing but control everything.
Right.
Yeah. And some of you will get that. I know Diane does, but it's a whole nother, probably a 2-day seminar.
Right. And I had immediately started thinking of all the stuff. You bet.
Yeah, I know.
Yeah. Because if you get named in that lawsuit and you don't have some liability protection built around that business, they're coming after your personal assets, your toys, your home, your cars, your everything. They're coming after all that.
Yeah.
And they're going to go for whoever has the deepest pockets. And so we want to always make sure that all the contractors have some sort of liability protection. And oftentimes, by putting that liability protection in place, we can also turn it into some tax planning savings. And the way we do that is by sheltering income from self-employment tax. And so the big difference is if somebody's operating as a sole proprietorship or a general partnership, and we look at the entity and decide that maybe it is best to be held in an LLC or a corporate entity of some sort, we're able to shelter quite a bit of that net profit from self-employment tax. And that starts saving a bunch of money because self-employment tax is 15.3%. So that's a big percentage that we can potentially put back in somebody's pocket.
Wow. Yeah. This the wrong or the outgrowing entity or even the wrong entity to begin with. I know I see a lot of people, in some of the Facebook groups I'm in, you hear conversations or you see conversations, and I see a lot of guys going, well, what entity do I need? And I'm going, goodness sakes, one's got an LLC, one's got an S-Corp, one's got this, got another thing. And I go, dude, I said, don't be cheap. Go get a lawyer or you have your accountant, find out what's the best. I don't want to pay all that money. No, I said, paying the money now is cheaper than losing it all later.
Oh, yes. Yeah. Because depending on the state that somebody lives in, it might be more advantageous to be the LLC and then get permission from the IRS to be taxed like an S-Corp. I know that is the true in the state of Idaho from what I've been told by various attorneys I work with, that they actually give a higher liability protection to an LLC than they do to an S-Corp. So that's a state by state analysis that needs to be done to find out, are you in an LLC friendly state or not? And if not, then we tend to stay away from LLCs. But they are a wonderful tax planning tool because an LLC is a hybrid. It can act like a sole proprietorship, it can act like a general partnership, or it can act like a corporate entity. And so it's a wonderful planning tool for people like myself,
right,
who can get in there and take advantage of the fact that you already have an LLC in place.
That's pretty cool. Yeah, it's better to go with the expert, and especially in this area, especially when it's not about it. Well, it is about saving money, but the right way from the right professional, not being cheap. Right. And
kind of in that same vein is making sure they hook up with a proactive accountant pretty much from day one.
Yeah.
Don't get in 3, 4, 5 years and then you start getting what we call the little love letters from the IRS because things aren't getting done correctly. And then it's really hard to dig your way back out. And it takes its effect. It takes a toll on your business. Versus spending that money up front and finding a really good accountant who's entrepreneurial and who will work with you and track right along with you and help your business grow.
Well, I would think that everyone would want to interview their tax professional and have the right questions. We should probably do something on that at another time. The right questions to ask.
We should. I have a chapter in my book called my Stop Overpaying Your Taxes book that talks about why finding the right accountant or the right tax professional is a lot like dating. And in there we give some of the questions that you should be asking to find out, does this person understand your business?
Right.
Because if they don't understand construction, depending on the kind of construction you're working in, there are some specialized rules out there. And if they don't understand those, they can get you in trouble just as quick as you can get yourself in trouble.
Yes, yeah. And then there's, a lot of guys will say, well, that's a gray area. Well, if it's written in, I want to know if it's written in the IRS code, and if it is, then I can take advantage of it. I don't want anything that's gray area.
Nope.
But if it's doable and it's allowable, I want every single one of those suckers I can get.
You bet. Yes. Yeah, but you do not want to play in what they call the gray areas.
Right.
You want to have it in black and white, right out of the IRS code, totally documented, so that you've got something to hang your hat on if the day comes up that you get audited or something. You can sleep at night because you know you're doing it right.
Right. I had
one
of those ones. It wasn't fun.
No. I say you don't have to cheat to save taxes. You can do it legally. There's so many credits and deductions and loopholes built into our code that just most people are not aware of them, and most accountants are not aware of them either.
And they're made. This is the ironic part for everyone who's listening. They are made for the business owner. They are not made for the employee.
Right, for the business owner, you bet.
Yeah. So for those of us that go out there and put our dollars out there and go to do the marketing and do whatever it takes to run a business, we are rewarded by the IRS. I know that's I can't think of the word right now, but you are rewarded by the IRS code for owning a business. And so find someone who can help you take advantage of everything that you are entitled to.
Right, and I hate the word entitled, but in this case you are entitled to certain write-offs,
right?
Provided you do it the way the IRS says you have to do it.
Right. Yeah, I'm not a real entitlement person myself, but I want what's mine. That's all I'm saying.
You bet. Yes. Yeah. We don't give them a penny more than you have to legally give them.
No.
And that means taking advantage of strategies. And I think, Dave, so many people live in the world of they don't know what they don't know. They know their trade. They know that kind of stuff, but they don't know the other part of this whole other world, and they don't even know that they don't know it. And so that's why it's so important for them to hook up with somebody who really does know this stuff inside and out and who can help walk them through it. Like, I would be the last person you would ask to go measure that board because I'll probably measure it wrong. I know my husband tells me all the time, I don't get it to the finest little detail of what it says on that tape ruler. And so it's like, don't let me measure your board. You go measure it yourself, honey.
Honey, it's about 25 inches. About? What are you talking about?
Yeah. And so he laughs at me when it's like he knows better now. You go measure it yourself. Don't ask me to. But it's the same type of thing in the construction world. If you don't understand taxes, then find somebody who will help you and who will educate you in those areas that you need to know, so that you're able to take advantage of this code.
Right. Yeah, absolutely. I know we're not going to be able to do all 10 today. Not night, it's for goodness sakes, today. So what is the next, I'm going to go with number 3. Let's just go down the order, and then when we stop off, we'll probably stop off at 4 or 5. And I'll put them in the show notes, or we'll give them a link to contact you to get the rest of them.
You bet. And actually what I'll do at the very end is I'll offer them a copy of my book, The 10 Most Expensive Tax Mistakes That Cost Contractors Thousands. And they can grab it, and they can have all 10 of them right there at their fingertips.
Cool beans. That's
awesome. I love doing that. You bet. I'd say the next one that I see is people being scared to death of the IRS. And we call that audit paranoia. They're so worried that no matter what they do, that they're going to invoke an audit. So therefore, they won't take advantage of certain deductions and credits that are right in the code because they're so afraid that it's going to cause an audit. And a good example of that is business use of your home. They're afraid to take that. And back in the 90s and something, yes, it used to be a red flag or a trigger for the IRS, but it's not anymore. The IRS has conceded that a big percentage of businesses are run out of their homes anymore. And so they've conceded that point, and it's not a red flag. And so people get so caught up in just this fear of the IRS. We always say you need to respect them, but you don't need to fear them. And I think an example I gave when I spoke at that conference in Rhode Island that we both attended was they come walking into my office with this envelope in their hand. It's got the IRS return address on it. They're holding it by the corner because they have not opened it. They don't, they're not going to go that far. They bring it in and they drop it on the reception counter, and it's like, I need Diane, and you can just see they're practically trembling because they got a letter from the IRS.
Yeah,
and
I know it can be.
It's scary.
Yeah, it's really is, because I like I said, I had it happen before. Luckily, I didn't do anything wrong. It was just I won. Let's put it that way. I won.
Good. Yeah.
And so my accountant at the time, she goes, "Can you send me? Can I keep this, because this rarely ever happens that that we win." I said, "Fine with me." I says,
Yeah.
But it was over. Actually, it was over a seminar that I took that I wanted to write off.
Mm-hmm.
And they wouldn't allow it. But they
did. So you had to prove the business intent?
Yeah, I had to prove that the business intent. I had to, and actually what I did is, because my wife and I both went, so I had double of everything, I sent them the 1,000-page book that came along with the seminar.
Good job.
I sent it to the IRS. Said, "Here's what I'm deducting, this 1,000 pages and the day and 2 days that I was there."
Right.
And they finally said, "Okay, we'll allow that." So that was
that was a very good move.
That was a scary, that really can be a scary thing, especially when you get a notice from the IRS and they've redone your whole tax, and you're going, "I didn't send this in," and then you come to find out because they feel you messed up. They redid it for me and sent it back for me to sign. Right. I said, "There's no way." No way. That's when I got scared.
Right. And half the time, the language that they use on the notice is not easy to understand. And so the normal common person tries to read it and they have no idea what the IRS is saying. And so that makes it even scarier too, because they get into the kind of what we call the legal mumbo jumbo of it. And it makes it very, very stressful and scary. So I always tell my clients, as long as we're following the code, we're doing what the IRS has given us permission to do. You can sleep at night. I can sleep at night. We're both happy. We know if we do get a notice or something from the IRS, I got your back. We got it covered. Yeah. Everything's good.
Yeah.
And
that's pretty cool.
Yeah. And that is a big area. And it stops a lot of people from taking legitimate business deductions just because they're afraid of what could potentially happen to them.
Wow. That's wild. That's really wild. Okay, so what's number 4?
So number 4 is not taking advantage of a retirement plan.
Okay, that makes sense, yeah.
Yes, I have lots and lots and lots of contractors who are working along, and all of a sudden they're hitting about age 50, 55, maybe 60, and retirement's starting to stare them in the face. And we have the conversation of, did you at least have an IRA or something? And they like, no, I had all these toys, but I didn't have anything like that. And so then it's kind of a hard, almost a slap in the face that we only have this many years left to start putting some money away for retirement for you.
Yeah.
And so I like to encourage my contractors, start when you're young. I know you're raising families and money can be tight at that era of life, but start trying to put some money away, whether you put it into a SEP or a simple or something like that. And later on, when you've got more cash available, then we can start looking at some of the 401k avenues or the bigger type plans, but at least get started doing something, so that come retirement time, you've got some money sitting out there, and you've kind of set the stage that I am invested in my retirement. Right. And you could do something as simple as an automatic deduction every single month, so it's not a big chunk at the end of the year. Because people say at the end of the year, well, I don't have $10,000, I don't have $15,000 that I can go dump into a plan.
Right.
But if you're doing it a little bit each month, then it's not so hard to do it.
That's a pretty cool idea, because I know that was probably one of my biggest challenges, growing up and getting older, and it was just a big challenge just to, and it all goes back to, as we were talking, it all goes back to lack of planning all the way around.
All the way around.
Right, and so now I'm playing catch up, and thankfully, which that I make a lot. It took me after 2008. It took us almost that many years, 8-9 years, to get back to where we were at 2008 when we lost everything. So yeah, so I mean that was that's a whole other story altogether. But so now we're actually at, I'm 63, actually starting our retirement planning, which is really, everyone who's listening, that's too late.
It's too late, yes, because you can't hardly do it in a short period of time.
Yeah,
and I'm not assuming that you're going to retire at 65 or anything, because most entrepreneurs don't.
Well, no,
they keep rolling.
Yeah, honestly, I don't really ever see myself retiring from. Maybe someday I'll retire to doing more things that I would really enjoy doing, and as I enjoy doing a lot of things now, but I really love business. So, and I love the whole concept of it working, and the psychology behind it and the marketing behind it. So I don't foresee retiring in the normal sense, maybe slowing down, but ramping up in other areas. So the income is there now, and we have a lot more income than we've had in a long time because we have multiple businesses. So it gets dumped into areas that will bring us returns within the next 10 years.
Right. Yes. Yeah, you're on the shorter term plan.
Right. So if I stayed even today and didn't make any more money in the next 10 years, I would still, in the track I'm on, have everything paid off and have a decent monthly income for the rest of my life.
Mm-hmm. Well, congratulations. That's good.
But it's going back to, I had to double down and do extra planning now because I wasn't wasn't diligent. It's not that I wasn't smart enough. I really didn't know what I didn't know, but I wasn't diligent enough to seek the expertise, like in your area, to figure out what to do for the future.
Right. You imagine if you would have started putting something away at about 30 or 35 years old, what that would do for you today.
Right.
So, yeah, I would have to say I was in the same boat. I didn't start until a couple of years ago, and I'm mid-50s, so I'm not too far behind you. Coming through the recession, there was no way I could pull a penny out to do anything like that.
Yeah.
And then prior to that, I was raising the family, and the cash wasn't there. Trying to build the business, raise the family, and the cash just wasn't there. So I'm on double duty myself, trying to get to the point where we're reaching a certain goal, for the retirement years.
Sure. Yeah. And it's not really, and I know, like yourself, you're a lot like me. You're probably can't see yourself stopping doing anything, but the income coming in will make things a lot easier and more fun to do stuff.
You bet.
Yeah,
I don't want to retire like my mom is, who's just living on Social Security and a little small pension.
Yeah.
I don't want things to be that tight. I want to be able to go have some fun and do some things and
take your
enjoy.
Kids.
You bet.
Yeah.
Yes.
That's why we had kids, so we'd have grandkids.
I know. They're so much more fun than the kids were. Because you spoil them and send them home.
I know. They're just a blast. And I have. Okay, so let's one more, and then we'll talk about how to get in touch with you and your book offer. And so what's that fifth one? We're going halfway today.
Okay, halfway. And I got a whole bunch of ones here. I'm going to go ahead and choose employing your family.
Okay,
whether it
that's
be
a great one.
your kids, your parents, your whatever family members. In today's society, it seems like we have various people in our families that we help to support. Sometimes it's our college-age kids, sometimes it's your younger kids, sometimes it's your parents who didn't plan well for the retirement years, and you end up supplementing them through the retirement years. If you can come up with a way to employ them in your business, you've just taken something that was an after-tax deduction and moved it into a pre-tax deduction.
Sweet.
And I'll give the example of my own mom. She has been working for me for over probably close to 40 years now, 35 or 40 years, but I'm only 29. Anyhow, now that she's up in her 70s, she needs a little extra help each month to be able to make things work. And so she has continued to work for me, even though she's well past retirement age. But she just works like a 1 day a week, sometimes, a couple half days, whatever. Her schedule is so flexible. She can come in and do whatever she wants. But that gives her that added little spending money that I would be giving her otherwise. But I'm able to write it off through my business because I have her come into the office and do various projects and things for us.
That's cool.
So, yeah, it's a nice way to help the parents. It saves their dignity because she would not like it that she would have to accept money from me, but she's okay with earning it and coming in and working in my office. And so it's a win-win situation for everybody.
Yeah, and it's a great thing for your kids and your grandkids because it teaches them a work ethic.
It does, yes. You're not handing it to them on the proverbial silver platter. You're making them work for it. They want the money, they have to earn it. So the IRS says that you can employ children as long as they're at least 7 years old. And that was through a court case that's where that determination came from. Cool. But you can't employ a 7-year-old to do something that's beyond a 7-year-old's abilities. Right. So you kind of have to watch those kind of things. You have to make sure it's age appropriate, and it's safe, and you can't have them on your excavator. Even though some 7-year-olds can run an excavator. I have a client whose 7-year-old can run one because he grew up on the thing.
Yeah. So, I just watching Dad,
Yep. And so, cool. But, yeah. So, you have to make sure that you have them fill out a timesheet just like you would any other employee, that you actually set them up on payroll, and depending on your entity type, whether you have to withhold Social Security and Medicare or pay unemployment or not, and that's another state-by-state issue on some of those things. But it's a potential. It's a way to pass some money down to them and get it off of your tax return. That they can earn about right around the $10,000 mark before they have to start paying any income tax.
Nice.
And that's because of the standard deduction out there. And then if they do start paying, it's at the 10% level. So if we can pull some stuff from us who are probably at least at the 25% or higher amount and pass it down to somebody who's at the 0 or maybe a small amount of it at 10%.
And charge them
that's a huge,
right? No,
yeah, that's a huge, huge amount of tax savings. So it's a great way to pay for things like your football camps and basketball camps and horse camps and dance lessons and gymnastics and a lot of that kind of stuff for the younger age kids. And then as you move on up into your college age kids, it's a great way for them to come home and work for your business over the summer, or if they're going to school locally, be able to come in and do some work in your business and help really with their needs that they need while they're at school.
Yeah, and here again, it goes back to planning and knowing.
Mm-hmm. Yes.
So that's why they need a tax coach like yourself to help them along the way so they can do the right things that will actually help them create or not create. Well, it is in a sense creating more profit because you're getting to keep it.
It is.
Because you're doing things the right way and according to the government standards.
Right. There's a lot of these smaller type deduction, like the paying your kids thing, that you're spending the money anyhow.
Yeah.
So why not move it over to a tax deductible way to spend that money?
Yeah.
And then you're saving that difference in the tax that you would have paid on it versus what you're not paying now. And that's money you put right back in your own pocket.
Yeah. So, and that's pretty cool because, here I'm thinking about, I had a friend that when his kids were like 9 and 10 and 11 years old, he did pretty much the same thing, but he gave them their own checking account, taught them how to pay bills, how to balance a checkbook, and it was they worked, they got paid, but it also, they paid for their schooling, they paid for their books, they paid for their, their like you said, their gymnastics or football or baseball camps and stuff like that. But it was, he had taught them so that when they became teenagers, they were, in essence, self-sufficient in a sense, because they knew what a checkbook was. They knew that you couldn't spend more than you had, which was a great learning tool all the way around.
Right. And you can just think about how well he set them up for success for the future.
Yes.
Just by doing those simple things like that with them.
Cool.
Yeah.
This has been awesome. I just love talking about how I can make more money by saving more money and keeping what the IRS says I can keep, and I don't have to worry about it. So, Diane, how can our listeners get in touch with you?
Dave, the best place is for them to go out to www.taxcoachforyou.com, and we use the number 4, so taxcoach, the number 4, YOU.com. And if they'll click on the books tab, they will see a list of my books, and quite a few of my books are free. The one that we've been talking about today is the 10 most expensive tax mistakes that cost contractors thousands. We just ask that they pay a minimal fee of $4.99 to cover shipping and handling, and we will send them out a paperback book, and we're there to answer any questions or whatever they might have. If they're interested in learning more about proactive tax planning, I offer a free tax analysis where we'll take a look at their last couple of years' tax returns and see if they have mistakes or missed opportunities, or if they are a good candidate for some tax planning services.
Cool beans. That's awesome. That's really awesome. I really appreciate you spending time with me today and going through this. I just get excited about saving money or not paying more than I have to. And I think everyone should. Oh,
yes, they should definitely get excited about this stuff.
Yeah. Thanks so much. I appreciate you and taking time to share your expertise with us.
Oh, you're very welcome. And thanks again for having me back.
Awesome. Again, I want to thank you for joining us and investing your time with us today. I hope you enjoyed this week's episode. And if you did, go to iTunes and give us a shout out. You can also go to our website, www.contractorsecretweapon.com, and check out today's episode and leave us a comment in the bottom of the page. And if you haven't gotten your 15 secret weapon strategies to getting higher-end customers, get it while you're at the website. Also, I want to thank again our sponsors for keeping this podcast alive for your profit-making pleasure. And so go be profitable this week. Work smarter, not harder, and learn how to leverage your time and your knowledge so that you can be more profitable. Again, see you next week.
Thanks for joining us for another weekly episode of the Contractors Secret Weapon podcast with Dave Negri. We would love to hear your comments about this episode, so visit us online at www.contractorsecretweapon.com and let us hear your thoughts. If you are listening via iTunes, please leave us a positive review. The more positive reviews we receive, the more other contractors will benefit from this show. Thank you, and see you next time here on the Contractors Secret Weapon podcast.